All right, so today we want to look at sniper entries. Now, let me just put back my analysis for this. Okay, so we want to look at sniper entries and the importance of that. So sniper entries is our focus. The next thing is importance. So we also want to look at the importance of sniper entries. But the way I'm going to explain sniper entries here, it's not like the way probably other people explain it. And the reason is simple. I just feel this is a better way of explaining what sniper entries are. So essentially, if you have a market going upwards like that, let's say you now have the skill to identify the overall trend where the market is going. Now, sniper entries just means at what point exactly are you going to enter? So let's say in this market, right, it's moving upwards. So you know that after the market breaks that resistance, it will tend to support. But you want to know exactly here at this level here, at that level, what's really going to make you enter that market at that specific level? So that's what sniper entries are. So these are just entries where you have a better risk to reward ratio. So you have a better risk to reward. And this is important in trading. That means if I enter from here, obviously I'm going to make far much more profit because my stop loss will literally be just below that level. And then you take profit can go all the way up to that point. Or you can think of this as another way of thinking about this is if you had entered, let's say you waited for the market to break that level, that means then your stop loss literally has to be, that means here you are going to make way less profit as compared to someone who had entered earlier, the earlier example I gave. So that's just the importance of sniper entries. So in this video, I just want to explain exactly where you're going to enter from. Like what makes you enter at a specific level. So now the easiest way I've found to have entries where you're not even scared of anything is having this idea I call pre having predetermined levels. This is going to give you more confidence in your trades rather than not having this. I know some people say you just have to wait for the market to show you what it's doing, which is true. Like you have to wait for the market to show you what it's doing. But what I've discovered is whenever you just wait for the market to show you what it's doing, most of the times you find that you are not very confident in your trades, hence you hesitate when it comes to executing. But if you have predetermined levels, what I mean is this. Let's say the market has just started going up. Like I've checked my higher time frames, it showed me that it's in an uptrend. Then let's say I go to a lower time frame, I find that there is this. What I'm going to do is I am going to mark out this new high it has formed, and then I'll have my drop that below. I'll have my trend line channels already set. So then I'll say You've seen, right? So let's say if this is a live market, it has moved this, and I've already seen on higher time frames that the overall trend is to the upside. So what I'm going to do is I'm going to have a predefined level, a predetermined level, which in this case is this point here. I'm going to say that if the market breaks above this and comes back for a retest, I'm not even going to think. The moment it gives me a bullish engulfing candle or any candlestick that shows me that the buyers are in control from this level, I'm going to enter the market. Then let's say the market goes from this point, bounces off that, comes to this point. Now, since I had already anticipated this move, this even gives me more confirmation. Hence, I won't even hesitate. I'll just go ahead and trade this to the upside. I'll take it all the way to that level there. I exit because I know probably going to pull back a little bit. So this is what I mean when I say I have predetermined levels in place. Now we'll also look at this on the live market. But I think you've gotten the idea of what I'm talking about. This will make things way easier than just waiting for the market to show you where it's going. You want to be very confident if it moves in a specific direction, unless you had already predetermined. And then the other thing is, people always ask me if the market doesn't go where you had anticipated, what do you do in those instances? My answer is always simple, and this is going to change your trading. Don't trade. If the market hasn't made your setup, it hasn't gone in your direction, simply leave the market alone. So let's say in my example, right? Let me just remove these heads and shoulders I had drawn. All right, so let's say we're in this market. This is New Zealand USD. I've seen that this market overall, it's in a downtrend from my higher time analysis. Now, let me do this. I was going to extend this all the way to that level. You can see I always talk about this having three touches. You can see that's one where that touch, two where this one. So our interest will be right at this point here. We'll be expecting the market to make some form of reaction there. Now, here's what you're going to do. Once the market reaches this level here, what are you going to do? Simple. You're just going to wait for, let me see if I can extend this circle. Okay. You see, once the market touches that line, you want to just observe the candles it forms. So you can see here that it formed these bearish engulfing, more like an evening star. What I'm going to do, I'm not even going to think whether it plays out or not. Since I've seen my confluences right there, I enter, I'll put my stop loss above this level. This is the most recent resistance level, so I'll put it right above that. Then this, I can drag it all the way down to 1:3 because the market has very strong momentum to the downside. You've seen, right? So now that has given me my entry. Immediately I see that I've entered. This was already a predetermined zone. So since the market has followed what I said, now my confidence even skyrockets. Hope that makes sense. Like if something goes exactly the way you said it would, it gives you more confidence than just hoping that the market will go this direction or that direction. You won't have confidence when you take such types of trades. So for me, this is how I break down this idea for top-down analysis, and sniper entries as well. I don't want to be surprised. I want to say something, then the market does it. If it doesn't follow what I said, it's as simple as I don't trade. That's why I have a list of currency pairs here. One or two of them will do exactly like I planned. Once they do that, that's when I trade. If I don't see what I'm looking for, I don't trade. As simple as that. So the next one, we can also look at USD card. Let's look at USD cards. So you see, USD card was over in an uptrend. All these setups played out this week. So I observed that this was in an uptrend. So what I did is I came up with a trend line on the downside because I wanted to know exactly where the market is going to bounce off from. Right? Then I was looking for the market to break that level. So from this point, let me just start from where I made that. So I had that touch on my trend line. Remember, I'm always looking for 3 touches minimum because 2 touches make up a line. The third one makes up a trend line. So you've seen the way it is here, right? This was pushing to the upside. Now, since I've seen that this was a point where the market had formed some form of resistance, when we broke this level, I marked this also as another key level that I'll be looking for. But my main interest was at this point here. I wanted to see how the market is going to come react when it reached that point. So now, here you can see that it made a bullish engulfing candle. Now, once I saw the bullish engulfing candle, you can see this huge candle here. Once I saw that, there's nothing about thinking. What I'm just going to do is, right where it closed there, I enter the market, put my stop loss below this point, just below that, because I know if it comes all the way back to this point, my setup is invalidated. Then the first tip is 1 is to 5, this point here. Then I push this all the way to 1 is to 3. All the way to there. I've moved this, it was right around here. 1 is to 3. I can actually reduce it. It was somewhere around that level. I hope this makes sense. So this is the idea of sniper entries. Why? Because you've seen I'm just risking a little bit here, but my gain is massive. That's what sniper entries are. So in order for you to have sniper entries, what you actually need is you need to wait for the market to give you setups that are predetermined. Predetermined just means you've already decided where you're going to take your entries from. So if the market does the opposite of what you anticipated, you're not taking the trade. For instance, this is an uptrend. Let's say the market has pushed all the way to that level. Now I'm saying, okay, I saw this was some previous resistance, which obviously now has turned into support if the market comes back to respect that. So then I've also drawn my trend line channels here, right? Then even the upper one so that I can know where to exit or my take profit. Now, after seeing this, already you should have a predetermined area to enter the market. So for me to be somewhere right around that level, because it was a previous support turned into resistance and it's also being supported by these channels. Then let's say this market disrespects that and it comes all the way back to this point. It doesn't give me an entry signal. It breaks that level, retests, and starts going to the downside. Now, this for me is going to be a B trade, a B setup, because it hasn't followed exactly what I had anticipated. So my risk is also going to be less. Since I would notice that here it has formed some form of heads and shoulders pattern. Hence, this is a reverse, so the market has started going to the opposite direction. Where I'm going to risk a lot is when the market does exactly as I had said to the teeth. Let's say, for instance, this same market, the market comes back to this level, shows me my bullish engulfing candles, then I trade now with maximum risk. Because I can open up to more risk because I know that this is an A plus setup. Although it fails, if I just get out of 10, I just get 5 of these right, it means already I'll be way profitable than focusing on B setups where you're just hoping that the market goes a certain direction and you start reacting as a result. I do trade those ones, but this for me has been the best so far when it comes to sniper entries. So that's what sniper entries are, just identifying a predetermined level. So let me just talk about what we've looked at. So we've looked at sniper entries, sniper entries, sniper entries. We've also talked about importance of these sniper entries. Remember, sniper entries are important because they give you a better risk to reward. I showed that in the onset, the example that I gave. So sniper entries gives you a better risk to reward. Then the other thing is having what I call a predetermined zone of entry. This one is very, very important. Why? Because anything that you say and then the market does it, it gives you way, way more confidence than just coming to the market without having an idea of where you're anticipating, without having a bias. A bias just means your anticipated direction of the market. Now, without having a bias, that one it becomes very, I wanted to say very dangerous, but no. It okay, it doesn't work for one reason. It's because you're not very confident in what you're doing. It's like you're just now guessing, like, okay, let me just come to the charts. Then you're just looking at it go up. Then you're like, oh, it's an uptrend. Then it starts going down. There, like it's a downtrend. It goes up again. You're like, then it never ends. So having a predetermined zone helps you because once the market does exactly what you thought it would, you even have confidence. You feel yourself, you're like, okay, yeah, this is what I anticipated the market would do, and it has done it. Now I can enter the market because of the bias that you've made. So this is all about sniper entries. Don't forget to like, share, and I'll see you in the next one.